In this video, I'll talk about how Warren Buffett gained over $180 billion. Don't forget to subscribe. Let's head into it. Warren Buffett. Berkshire Hathaway CEO Warren Buffett is arguably in a class of its own when it comes to investing legends. Since taking the helm of Berkshire Hathaway in 1965, the Oracle of Omaha has led its stock to an average annual return of 20%. Based on the cost basis of Berkshire's major holdings, the following 5 stocks have netted Buffett $181.1 billion in combined unrealized gains, which is about 88% of all current unrealized profit, not including dividends paid. Apple, approximately $101 billion, $800 million in unrealized gains. Easily the best investment of Buffett's tenured career is Apple. Even after modestly paring down his company's stake in the tech kingpin, Berkshire Hathaway still owns 907,559,761 shares at a cost basis of $34.26 a share, with Apple closing last week at $146.39 a share. The Oracle of Omaha and his team are sitting on close to $102 billion unrealized gain. Investors certainly shouldn't look for this stake to be reduced any further anytime soon. That's because Buffett views Apple as Berkshire Hathaway's third business. It's a globally recognized brand with an exceptionally loyal following, as evidenced by the mammoth lines outside of its stores anytime a new product hits the shelves. And as you're probably aware, the iPhone is the dominant smartphone by market share in the US. In addition to Apple being a product innovation juggernaut, CEO Tim Cook is overseeing a steady transition towards services. By emphasizing various subscription-based platforms, Apple can reduce some of the revenue lumpiness associated with the tech replacement cycles and likely boost its operating margins. Bank of America, approximately $24.5 billion in unrealized gains. There's no industry on the planet Buffett loves more than bank stocks, and there's no bank stock Buffett favors more than the Bank of America. Berkshire Hathaway owns over 1.03 billion shares of Bank of America with a cost basis of $14.17 a share. This works out to an unrealized gain of just over $24.5 billion. Based on where Bank of America shares closed this past Friday, July 16, Buffett has always been a big fan of playing the economic numbers game, which is exactly what he's doing with Bank of America. Since the US economy spends a disproportionate amount of time expanding relative to contracting, bank stocks like Bank of America should benefit from stronger loan origination and higher net interest income. The Oracle of Omaha is fully aware that recessions are a natural part of the economic cycle, and he fully understands that the long term strongly favors optimists. American Express, approximately $24.5 billion in unrealized gains. Whereas the gains racked up in Apple and Bank of America have come within the past couple of years, the nearly $24.5 billion in unrealized gains in credit services behemoth American Express have been built up over the past 28 years, with a cost basis of right around $8.49 a share. Buffett's patience had paid off in a big way with Amex. Similar to Bank of America, American Express is a cyclical company that benefits from the aforementioned numbers game. If the US and global economy are expanding, consumers and businesses are more likely to spend more, thereby helping boost payment processing revenue and profits. Keep in mind though, Amex is a double dipper. In addition to processing payments, it's also a credit services provider. This means it can generate growing amounts of free revenue and interest income during long-winded periods of expansion. Coca-Cola, $21.262 billion in unrealized gains. Speaking of tenured holdings, no stock has been a fixture in Buffett's portfolio for longer than beverage giant Coca-Cola, with a cost basis of a fraction under $3.25 a share. Buffett and his team have piled up almost $21.3 billion in unrealized gains by owning Coca-Cola since 1988. Like Apple, we're talking about a company with insanely strong branding and brand recognition. Coke products are sold in all but 2 countries worldwide, and it has more than 20 brands in its product portfolio, generating at least $1 billion in annual sales. Coca-Cola enjoys the best of both worlds, with 20% of the developed market cold beverage share, which represents a higher growth opportunity over the long run. Beyond geographic diversity, marketing is a big reason for Coca-Cola's success. The company has not been shy about turning to social media and well-known ambassadors to represent its brand, and it has clear holiday tie-ins that go back decades. Considering that Berkshire Hathaway is netting almost a 52% annual dividend yield based on its original cost basis for Coca-Cola, there's absolutely no incentive to sell this position. Moody's, approximately $9 billion in unrealized gains, while Apple single-handedly takes the crown for generating the highest unrealized return in nominal dollars for the Oracle of Omaha. Credit ratings agency Moody might well be Warren Buffett's greatest investment on a percentage basis of all time. Berkshire's cost basis is $10.05 a share, following Moody's spinoff from Dun & Bradstreet in 2000. Moody's closed this past week at almost $378 a share, good enough for a 3,661% return and nearly $9.1 billion unrealized gain. One thing keeping Moody's busy is historically low lending rates, with the Federal Reserve standing pat for as long as possible on interest rates. Businesses haven't been shy about issuing debt to hire, acquire, innovate, or even buy back stock. As in Apple's case, with so much corporate debt issued, Moody's has been actively evaluating the debt landscape. Equally exciting has been the generally heightened levels of market volatility and economic uncertainty since the beginning of 2020. Though Moody's is best known for its credit ratings operations, its fastest growing segment tends to be analytics. As long as deep levels of uncertainty exists, Moody's Analytics has double-digit annual growth potential. As with Coke, Buffett's patience has resulted in an insanely high yield on cost with Moody's, despite a 0.7% nominal yield. Berkshire Hathaway is netting an almost 25% yield annually based on its initial cost basis. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. With that, I'll see you in the next video.